Welcome to the full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:57 p.m. that is Central Time, and today is April 29th. There was a lot of things to think about in the market today. We had the Fed decision. They didn't raise rates, and then we had Chairman Powell's swan song as the governor and his last press conference. And then we also had the ECB. They didn't raise rates either. Now, against that background, the dollar was up mildly. And then the yen is weakening, and it's now at 160 almost exactly. So it's on the cusp of breaking on the downside. Then what we also had was oil prices up very significantly. $8.80 on the upside for Brent at the time of recording. That's a new high. Now, I think it's particularly interesting here that oil prices are now back at where the peaks were immediately after the invasion, and yet the stock market is still relatively sanguine. So there's certainly a lot going on there, and what we're definitely seeing now is that oil is acting like a volatility index, and what it is really reflecting is the risk in the global economy, primarily because a lot of the reserves that have been used to cushion the impact of the hiatus of on supply coming out of the Persian Gulf, that is beginning to be run down. And for example, China had 1.4 billion barrels in reserve, but consumes about 16 to 17 million barrels a day. Well, then if you're talking about 10 days, then it's 160 million barrels. Talk about 100 days, well then that would be 1.6 billion barrels. So when you start to multiply out those numbers, it sounds like an awfully big reserve and not all that large when it comes to a durable hiatus. So what we can definitely say is that even the best provisioned countries are going to start to experience stress. And then, of course, we had the mega cap earnings. And I delayed recording for an hour just to see what the immediate reaction would be to those earnings. And I think it is pretty universal. The stock market reaction to the earnings from Alphabet, Amazon, Microsoft, and Meta has been very much dependent on whether they're making money from their investments. But I think what the majority of investors are looking for